So this is the pound USD analysis for Monday the 9th of October. So let's just have a look at the higher time frames first to get a better understanding of what we see here on the pound. So we've had a pound push down, and let's just see. You could say the pound, even if you look at this all the way back to 2009, has been in a downtrend against the US dollar. And we did have this period of consolidation between 2000. So would you say from ultimately from 07 to 2009. So during the financial crisis, we did have a sell-off in the pound against US dollar. Went through this couple of years of consolidation where it's been pretty range bound, and in light of the Brexit, we did have a further breakdown in price. We did have this Brexit candle here, and prices did push down further. So we did get a bit of consolidation, and prices were pushing up, appear to be breaking out to the upside to retake the Brexit losses, but ultimately was not to be. So, well, not at the moment anyway. So the overall trend, it still does appear to the upside, but rather worryingly, September, we were putting in a bullish engulfing candle, but ultimately we did sell off quite a bit from its highs, and yeah, we did sell off quite a bit from its highs. Now, the month of October so far, we've seen quite a bit of selling, as you can see on this monthly chart. Quite a bit. Then we didn't see much movement to the upside, and we're almost retaking the lows of the previous month. We're just a couple hundred pips away. So let's go down to the weekly time frame, see if we can get a better understanding. And we've had 3 consecutive weeks of selling. The first 2 weeks of the 3-week sell-off were pretty small in nature, but last week there was quite a bit of selling. We ultimately, with the candle closing near its low. Thing is, the candles come into the 20-period moving average support. It could possibly be support, as was seen over here on the 28th, and so this was in August, where the 20-period moving average acted as support for a further push to the upside. Also acted as support in June also, and back again in April. So we have to see how these prices develop from here now. 20-period moving average on the weekly time frame is currently sitting at, goodness me, if I can get, let me just change this, see if I can actually see this. Oh, there we go. So 20-period moving average is currently sitting at 130.41. 130.41. 50 period sitting at 27.31. So let's just let's just get the scaling on there correct. So sometimes what happens is, especially with prices, you'll see a large candle indicating a bit of more of a sell-off, and it's almost like an exhaustion candle. It's one last move by the bears or the bulls at the pretty much near the end of a trend to give it one last go before prices retrace quite heavily or reverse. So this possibly might be that candle pushing near its lows after 2 consecutive weeks of sell-off, all the way down into that support. But I'm going to use the weekly pivot to ultimately guide me. And so you'd say, even though we're on an uptrend, we are into support, so possibly buying ultimately on the monthly time frame. You are still in the uptrend, but the candle that's currently forming is not very positive. Now let's just see where our weekly pivot is for this week, and it's at 30.93. So if I go down to the execution time frame, Actually, let's go down to the daily first and see where we are. Now, this daily chart, you can see we've come down to this area here where we've got this moving average marked out in black. We did have a bit of a pullback from it, and there aren't really many levels in and around here that you could say. I suppose you could say these are like levels here where I'm moving the stylus, but the very next level I've got marked on the chart beneath where we are is at 29.83. I suppose 130 is going to be an important level, and below that 28.80 and 27.74. Those are levels are marked out, but let's just go down to execution time frame. And yep, so I've got 30.03 to the downside, 29.83, 28.80 and 27.74. That's to the downside. And I'm just gonna have a quick check of something, just make sure I get it all correct. And let's just see, 30.93. And if I go down to the execution time frame, let's just get that marked out in the charts. 30.93. So it'll be around there. Oh, actually, it gapped up, didn't it? And just bear with me a second here as I put. Here we are, 30.93. So what we've seen so far is the market gapped up, and first candle at the market open was bearish. We do have a gap all the way down to be filled at 30.64. 30.64 is it? Make sure I get this correct. 30.71. In and around about 30.71, which isn't very far away, to be honest, because we're currently trading at 30.83, I think. Yeah, about 30.83. So, what do I expect? Where do I expect prices to go? Now, in light of the strong bearish momentum, it wouldn't be unreasonable to expect prices to further fall. We have not come down to. We're currently not in an area where I would expect a reversal in price. If we did come down to say the 130 or 129.83, upward movement in price would give me more confidence to go long. Now, my most important pivot is at 39.3. So if we do trade above it and we indicate that the level is going to hold, despite, well, I do expect the gap to fill. It's not a very big gap, so I do expect the gap to fill at some point today on Monday the 9th. So I pull back down to this 20 period moving average, fill in the gap, and further move to the upside. Now, if we get a strong close above 30.93, targeting 31.47 wouldn't be unreasonable. Now 32.81, that might be rather ambitious in light of the sell-off in the pound, but that's an upside target. And but ultimately, if we do still get the bearish sentiment, we're looking to go down. I've already showed the levels on the other time frames, so a breakdown from 30.93 and a break below the 20 period moving average, you'll be looking at targeting 130.03. I suppose you could either that level or 129.83. I suppose you wouldn't target both of them. It's pretty small distance between the two. And below that, 28.80 and 27.74. So those are the levels. In light of the bearish candle that's forming, we might see that bounce I mentioned because of the 20 period moving average on the higher time frames. We might see a bounce, so a bounce all the way up to 31.47 or 32.81 would not be unreasonable. But it's a case of just seeing how prices develop now. If it does hold at 30.93, then there's better, you would say, better odds of it going up than say if we were to break down from this level. So we weren't able to break and hold above where we opened at 30.93, then yep, targeting it to the downside is only logical. So that should wrap up the pound USD analysis before I go. LCS, like, comment, subscribe. Thanks for watching.